Welcome to London's beautiful Farnborough Airport and Jetcraft's launch of our 5-year pre-owned business aviation market forecast. I'm Chad Anderson, the president of Jetcraft, and I'm pleased to share with you our predictions over the forthcoming 5 years. How does business aviation capitalize on the post-pandemic boom we're experiencing? Please stay tuned and you'll find out. At the beginning of COVID-19, few could have foreseen how quickly first-time business aviation users would lead us to recovery. In the fourth quarter of 2020, we broke all the forecasts. In 2021, demand continues to rise rapidly. But I'm a firm believer that we're a long ways away from the irrational markets and the spiking values of past booms. The post-pandemic momentum for business aircraft sales is going to be shaped by ambition, but most importantly, manageable growth. This year's Jetcraft forecast takes advantage of updated and improved methodology, taking into account our past transactional data, our client insights, and balancing it against global trends. All of the above enables us to predict buyer behaviors over the next 5 years. Here are our findings. To begin with, pre-owned transaction volume will continue to maintain a healthy growth rate. Ultimately, by 2025, we'll see 2,647 transactions annually. That's a 4% combined annual growth rate, which will be led by the midsize and large jet categories. Next, let's take a look at transaction values, which we forecast will be $57 billion over the next 5 years. The values are going to be led by the large jets. And by 2023, the value of aircraft sold will exceed that which we realized in 2018, our industry's last peak. And on the topic of depreciation, it's going to return to normal, and we predict that'll happen in 2025. On average values, the picture for the next 5 years is a rational one. We're not going to see a repeat of the 11% spike in values we saw during the 04 to 08 bubble. Average transaction values will now start to level off post-pandemic and sit at 2% growth through 2024. There are 2 reasons for this. First, a tighter supply and demand environment helping to sustain prices. And second, increasing numbers of higher-priced large jet transactions in the coming years, which will elevate the value average. So now let's take a deep dive into the post-pandemic market dynamics. Over the last 12 months, business aviation flight levels are at all-time highs, and particularly in the US. Business aviation is recovering far quicker than its commercial counterpart. And the reopening of international borders is continuing to give large jets more and more opportunities. Looking at data on high net worth individuals is also important. A majority report their wealth increased or remained the same during the pandemic. This population group continues to grow, and at a much faster rate than we've seen in the last 5 years. The big picture is being painted by the aircraft manufacturers. Wait times and backlogs have returned due to their disciplined approach and careful production schedules. For buyers who are unable to wait for new aircraft deliveries, are opting for pre-owned aircraft options. Let's take a look at the opportunities that we see through 2025. The ultra-high net worth individual segment is relatively untapped. 12% of them are users of business aviation, be it charter, jet card, fractional ownership, and of that 12%, only 18% are owners. That leaves this segment clear opportunity for growth in users and buyers. The journey to aircraft ownership is accelerating. Reduced airline services and increased health and safety concerns are making that decision to become an owner happen faster. And with global wealth rising, business aviation users will have more incentive to own their own jet. However, there are regional discrepancies. 4% of North America's 112,000 ultra-high net worth individuals are owners, whereas 1% of Asia's 91,000 own, and 2% of Europe's 74,000 own. When analyzing the dominant drivers to growth in the various regions, we look hard at the wealth levels and the flying hours. The climb in business aviation use and the increase in global wealth overall will yield more and more owners in Europe and Asia, narrowing the gap with the United States. To conclude, here are the top findings from our latest market forecast. We predict 12,261 pre-owned transactions, representing $57.2 billion in revenue forecast over the next 5 years. We also expect pre-owned transaction volume and value will maintain their current healthy growth rates, reaching 2,647 transactions, valued at $12.4 billion annually by 2025. Global trends are going to shape business aviation through 2025. With borders reopening, mid-size and particularly large jets, with their higher price and greater range, are predicted to lead volume and value growth overall. Post-pandemic dynamics and opportunities from an increasing wealthy population will be key factors in growing transaction volume. Despite the industry's high demand, we expect average market values to remain rational, growing marginally until 2024, with depreciation rates predicted to return to normal by 2025. And finally, wealth and flying hours, two key drivers of aircraft purchases in Asia Pacific and Europe, are expected to increase along with the number of new business jet owners, narrowing the gap between these markets and the ownership levels seen in North America's ultra-high net worth individuals. I'd like to thank you for joining Jetcraft's 5-year market forecast. For over 60 years, clients have entrusted us with their buying and selling decisions. Special thanks to our colleagues, our partners, our friends, and once again, those clients. It's thanks to them that we can continue to evolve this industry. If you have any questions, please get in touch with your Jetcraft local representative. But until next time, I'm Chad Anderson.